All right. Welcome everybody to the 40 Finance channel on this live stream, talking about the next 72 hours in the stock market, which Jim Cramer says are the most important 72 hours of the season. So that's what I'm leading off with today. Hope everybody's doing well. If you're one of the first few people in, please make sure that you leave just a quick hi or something in the comments so I can figure out if that's working correctly or not. And I'm just gonna sort of scroll over to this featured article here. So Jim Cramer, of course, of CNBC, next 3 days, most important of the year. Okay, so I thought it was just of the season. And let's try to get down to the nitty gritty on it. Basically, you have tech earnings. Let's see what he says here. Global stocks mixed heading into the most important 3-day stretch. We also have big tech earnings and the start of the Federal Reserve's policy meeting. So those are always big. It's usually better when the Fed doesn't do public appearances, certainly as of late. But it looks like we're going to get one here coming up in this week. Then, of course, we got Microsoft, Google, Facebook, Amazon. Thank you, Andrew, for putting a comment in, because now I know it works. Appreciate that. So the FAANG stocks, obviously, we had Netflix last week, but the rest of the FAANG gang comes in here. While the Fed will grapple with faster inflation signals and a roaring domestic economy. So the concern here, of course, is what they'll do in the face of potential inflation fears. Probably nothing, but it seems like every time they talk, people get nervous, and I get nervous to the extent that sometimes they just don't shut up, and stupid things happen and stocks go down. Benchmark 10-year notes yields held at 1.585%. That's actually over 1.6%, I think, as of today. Oil prices moved higher. CDC, kind of same old there. Tesla shares slid after solid first quarter earnings. We can talk about that if you want to, although I feel like Tesla gets really covered very well on YouTube. U.S. equity futures suggest modestly firmer open on Wall Street. Okay, blah, blah, blah. Just a note on that 10-year, which I should have here somewhere at the top of my screen. And I'm going to have to squish it in a little bit. Let's see if this works a little bit better. Right there. So it did creep. That's 1.618. where it's at now. And it's been a while since it got over the 0.6s. Not that that's monumental, but it's definitely heading up. If you haven't refinanced your home in the past 5 years or something like that, you certainly got some calls last week from mortgage brokers who were advertising, the next iteration of lower rates. So today's a big day. I want to just bring up the earnings here. Surviving Tesla yesterday. I think Tesla's earnings call was kind of uneventful, I would argue. I'm just going to cover it real quick. They stayed on pace with a lot of their targets. There's a lot of criticism, of course, always how they make their profits when you factor in the Bitcoin and the emissions credits. But all in all, I'd say they stayed on pace from at least what I was expecting. There wasn't a big gap there between what we thought was going to happen and what actually happened. So I would consider it a good day for Tesla. Looking ahead to the rest of this week and this next 72 hours, if you will, here's what we got. StockTwits, by the way, whether or not you like the website, it is, at least on desktop, it's got a really cool earnings calendar, I think, because if you put in a few favorites like I have here, they'll highlight them. and then you just click on the day and you can scroll down. So big one for me today, these are obviously all after the bell: Enphase, Visa, AMD, Microsoft, Google. GE's kind of relevant again. There's a lot of people who hold that. There's questions about whether they'll return their dividends or not. Starbucks, Pinterest, FireEye, anybody else? UPS. Raytheon's gotten pretty big here recently, not just in consumer defense, but there's a lot of folks who partner or they lump Raytheon into a space stock as well, which is understandable. Texas Instruments is sort of the ever so quiet chip maker here in America that doesn't usually get as much credit as it deserves. So some really big action after 4 o'clock today, most notably for me, Enphase and Visa. But this is big too, AMD. And one of the reasons that AMD's earnings is going to be interesting to read is because they come out after Intel, and Intel's already went forward. And Intel's trying to sell the story that the data center chip universe is in sort of a pause right now, that there was a lot of upgrades during the COVID pandemic, and people are just kind of kicking tires right now. That's how they're explaining their gap in sales in the data center. AMD, though, has long rumored been to stealing in a competitive nature, from the data center business of Intel. So if we listen to AMD and we hear AMD say our data center sales were outstanding, it kind of puts the onus on Intel, like, well, hold on a second. You told us people weren't buying data center chips, but AMD just came out and sold 6 billion of them, or whatever the number is, and that gets a little bit harder for Intel to squirm out of. So, and that's just only part of the AMD earnings call. They have their own challenges, which is potentially the fact that they do not make their own chips. So they outsource a lot of stuff to TSMC, other partners. Are we going to see the chip shortage make a dent in AMD earnings because they were not able to produce enough units to reach their sales goals? I don't know. But it's going to be interesting to find out here today. On the Microsoft side, I'm expecting what they always do, which is outperform and continue to push the transition into cloud. We might get some updates on Xbox updates, which is really a small part of their revenue, but also buying, other companies, stuff like that. That would be big. Google, I think the big part with Google right now is, has travel advertising returned and other consumer goods advertising that they fell off in last year? So if Google shows travel ads are coming back online, that's obviously a huge boost to their business. Starbucks. Starbucks isn't a stock that I follow, but I will say that it's a good indicator of consumer activity. And don't forget that Starbucks has a lot of international locations. So when you think about some of the restrictions going on in Europe, you think about how's China doing, you can get a little bit of a read from that just by going through your Starbucks reports and seeing, which countries are open and comping year over year. Really, you're probably looking at who's comping 2019. Just skip 2020 in general. But that's something to bring up. Pinterest is a stock I covered on a video yesterday. They, I think they're right at fair value. And frankly, I still think you want to get in on the 60s on Pinterest unless we hear something in this earnings call that suggests that they're growing faster than originally expected. Pinterest has a lot of high growth targets on it. It's sort of a fan favorite stock, and I'm not saying that it's a bad stock. I'm just saying in the 70s, if that's where it still stands, almost 80, 77.41 right now. If they're going to continue on the trajectory that we anticipated, say, in January or February, then it's a $65 stock. If they come out with new news that tells us they're going to grow faster than those expectations, okay, fine. Maybe you're getting into the 75s on that one, but not one that I would purchase ahead of earnings, at least for me. But we'll have to see how they do. All right, so that's a little bit of today. Just to put it on the board, here's tomorrow, which is obviously just as big. Apple, Facebook, Boeing, Ford, Shopify, Qualcomm, Teladoc. A lot of names in here with big expectations, right? Namely this guy. Facebook has recovered its stock price, so it's got pressure on it. Boeing, I don't know if it's as much sales as it is like, hey, did you figure out how to fix your airplanes yet? Shopify, very popular stock that's run up quite a bit. It has a lot of pressure on it. Qualcomm, more input on the chip side of things. Teladoc, which has seen a rocky road lately in terms of share price. How are they growing? Spotify, we already talked about. Oh, Shopify and Spotify, both are probably in the same boat, right? Which is stock prices went up a lot, expectations are high. Are you still on pace to hit that? MGM is a sort of, I would say, underdog sports gambling pick. Probably would be one that I would consider if I wasn't so bullish on DraftKings, so it'll be interesting to see what they have to say. Am I missing anybody? Let's see what Thursday, I don't know if I can get to that. Thursday, so TAP is number one on my screen because it's a stock I own. I expect nothing short of mediocrity from that one. Amazon, Neo, Twitter, Nokia, Microvision's getting destroyed today, minus 24%. That's one of those kind of Bitcoin plays where the company added a ton of Bitcoin to their balance sheet. Don't know why it's getting blown up today, but it is. Gilead, and that's about it. MasterCard, First Solar, Caterpillar. So yeah, heading into Thursday, those are big. Let's see, anything on Friday? Exxon, it's all oil. Clorox, not a whole lot of reasons to get up. I'm expecting oil companies will be seeing much better returns from a comp perspective year over year. I also noticed that in Ohio anyway, oil prices / gas prices are up, not substantially, but they're definitely up. So yeah. So that's a take on the most important 72 hours. Don't forget that we also had the Fed meeting, which I talked about right at the beginning of this live stream. And again, what we're really hoping from the Fed is they don't screw it up somehow. I don't anticipate their policies would change, but they're going to get grilled on inflation. They're going to get grilled on interest rates. And like usually the sentiment from economists and people much smarter than me is that the Fed is not prepared for the inflation that's coming. That's like, the street rumor, right? So usually if they don't get like answers to their questions, they go all negative on what the Fed's doing and they're blind and they don't know what's up. We'll have to see. Hopefully it just turns into a touch base and doesn't bother us. That's the ideal situation. So, all right. Well, thanks everybody for coming, and I'm going to look into questions now on the chat board. Once again, thank you, Andrew, for testing out chat. Lions here, big earnings this week, absolutely. What's going on, Ben? MT. Lions talking about Canadian Railway trying to buy Kansas City Railway in $33 billion deal. I definitely have never looked at Canadian Railway stock in my life. So just for fun, let's do it. Oh boy. Don't even know if I can on my Yahoo. There's probably like Special Canadian ticker symbol. There it is. Not really special at all, actually, just CNI. Let me see if I can adjust the screen. Give me 1 second here. You guys know how I struggle with this Yahoo screen sometimes. All right, so Canadian Railway, let's read the headline. Key regulator just gave Canadian Pacific a boost in $30 billion takeover battle. All right, so that could be big. I don't know enough about railways to say. It looks like the initial news sent the stock down. But usually with railways, you get a good dividend. This one is 1.79% on today's price. Positive earnings. If you look off to the side here, squeeze it in for you. You've got a couple misses. And I don't know how railways have struggled with COVID. I'm sure shipments are down, but you missed Q3, hit Q4, missed Q1. And one chart here that's really hard to tell because of COVID, I would say 17 through 19, the one thing I don't like is earnings going up, or excuse me, revenue going up, earnings going down. But I'm going to say skip 2020 because it's just too hard to tell with a logistics firm. So anyway, be interesting to see how their debt is since they're trying to merge. So they got $13 billion in debt on about $13 billion in revenue. So they've got enough revenue to conceivably make a play here. This cash level is awfully low, though in my opinion, I'd probably want to see, $2 or $3 billion in there. Never easy to tell on dividend companies with the cash, because when business is bad, if they keep paying out their dividends, like so many companies did during the pandemic, there's a lot of companies that pause their dividends, right? The bigger, stronger ones decided to plow through it and just keep paying. I want to say AT&T, but don't quote me on that. So what happens is COVID is going to crush your sales for a lot of companies, and you still opt to pay the dividend. Well, where's that coming from? That's coming from reserves. So that could be a situation with Canadian Railway where their cash is low because they're trucking through on the dividends, and they kind of figure we'll figure it out later. All right. Yeah, Lion, fresh haircut. I'm also standing up today, which is a little different for me. I just got done cleaning my little studio room here, and I had to move all the crap and vacuum and dust and stuff, because honestly, I only do that like every other month or so. So anyway, thanks. Let me know what you think. If standing up makes you guys dizzy, let me know. I just thought I'd try it for fun. Marcelo's asking about Enphase. I'm glad you did. Yep, they are reporting today. And my take on Enphase as a shareholder right now, I'm in at 180-ish. And honestly, when it dipped to the 150s and 160s, it didn't surprise me. It really didn't. That was a stock that I knew I was taking a chance on. It had a little bit of a story to it. Now, I don't think that it's a story like Nikola, right? With they don't have products or whatever that is. But what I did know about Enphase when I bought in when I did is that the earnings certainly did not substantiate the share price at 200 when I first got in. So Enphase dropping to 140s, 150s, it stung. It cost me profit for sure, but I am going to stick with this company. Looks like now a guaranteed 2 years and possibly much, much longer. And the reason for that is obvious, right? Which is just that solar energy is becoming more of a mainstay. We also have the bull case of here in America, Joe Biden in office and the work that he's doing to give and extend renewable energy credits, which he's essentially already done. So the runway for Enphase is great. Is it a value pick right now? Absolutely not. And what we need to hear in this earnings report is the CEO come out and say, you know, whatever happened in Q1, I actually don't even care. Like, let's just say they did par. He needs to reassure us that the environment going forward with these new Biden updates, with COVID going away, in terms of like home installs and whatnot. I know COVID's not going away. He needs to reassure us that the future is as bright as we think it is. And, you know, I want to hear some commentary about the extension of the energy tax credit. That should be good news for Enphase. So that's what I'm looking for. I want them to hit or slightly beat earnings, some version of that. And I want them to say, demand looks good. Our suppliers, or excuse me, our retailers, because they're the supplier, our retailers are putting in massive orders for this summer. Obviously, that money isn't here yet, but we're seeing great demand. That's what I'm looking for on Enphase. All right, so hopefully that helps Marcelo. Christopher, Microsoft is incredible. Everyone on the planet, everyone on the planet could be dead and they'd still beat expectations. Quite frankly, you might be right in the sense that if you think about it with Amazon too, all these cloud servers, like if we all died, they would probably still keep billing, right? And they would still keep running. So we'd have websites up and no one to look at them. I get your joke though. And I don't want to jinx it for Microsoft, but what a run. And you have to put Microsoft, I'm trying to think who else would be there, but they're certainly in my top 2 or 3 safest stocks to play in this market. Wouldn't say they're on sale right now. I think I just did a video and I did some basic price analysis, and I think I had them coming in at 257 the last time I looked. But today, we will know a lot more because we'll get a new EPS figure today and we'll get new projections for the year. So hopefully Microsoft keeps their streak up. I do not own it individually. However, like everybody else in the planet, Microsoft is well represented in my retirement ETF portfolio. All right, let me get a drink real quick and then I'll get to you, Henry. MVIS is a LiDAR company. Oh, okay. That was back on the one that tanked. Sorry, good call, Henry. So I was referring to MSTR that held the Bitcoin. So thank you. Andy, can you look at GE? Did they already report? Let me take a look. What happened with GE? GE reports. Reuters is good. They're technically supposed to, you know, not be opinionated. GE's cash flow was smaller than estimated in the first quarter as jet engine business struggled. No real surprise there. Company also reaffirmed its full. This is kind of what you're looking for on these gigantic corporations. Reaffirmed its full year free cash flow and earnings per share outlook. So they confirmed. This is good. Here we go, though. But this disappointed investors who were expecting an upgrade. So just reading those kind of like whatever 3 sentences, I'm guessing, let me get to a year to date. Not really that bad. I was going to suggest, and maybe we see some of it here, this is only a 1-month chart, okay? So it looks like a lot of peaks and valleys, but frankly, this is whatever, 1291, and this is 1381. So I was going to wonder if GE saw a run up before earnings, and then that's why they're down 217, minus 217%. That could be the case. I didn't see anything there that scared me. You know, people always hope for outperform. Outperform is hard. And let's see where they're supposed to land this year. So they did confirm EPS projections, 24 cents Next year, ideally, they get to 51 cents. Sales this year, kind of, minus 1.7 is the projection, and then next year, plus 6. It's not really a stock for me. Did they do the dividend? Nah, it's still showing 0.30%. Here's my take on GE. That's going to go hand in hand with Boeing to some degree because, like you read in that article, the lucrative aircraft engine business sounded like it was struggling. I only know what I just read a second ago. So if it is a lucrative and we know it's a big part of what they're doing, that needs to turn around, right? And I'm guessing that the 737 or whatever Boeing's problems are, I'm guessing that that's not helping, right? Because if folks are scared of certain airplanes to buy them, then GE can't deliver their engines to the airways. So look into that more. If the airlines can come back online, I didn't read that earnings report. Hopefully the CEO said something in there like we expect earnings or engine business to start to take off into June, July. If you see stuff like that, then you could be talking about an outperform. But right now they're saying it's nothing, right? They're just saying it is what you thought it was. And that's always a little disappointing, but I'll tell you what, it's way better than the other way, which Boeing could still do to us in a day or two. The other way is, oh, you thought it was going to be this, actually it's worse. And then poof, a stock goes down. I'm not saying that will happen to Boeing, but Boeing's, it's taken them a long time to get out of these knick-knack issues with safety. It's starting to get old after a while, in my opinion. But all right, so let's see. We have Fraser. The U.S. stock market is a casino. You're paying over $80 for $1 worth of earnings, plus the Fed is blah, blah, blah. That's one side of the argument. So I would say Fraser is, probably more conservative than I am in terms of that his or her expectations on earnings per dollar, because you do have to factor growth rate in there. But the sentiment that Fraser shared is one that a lot of people are bringing up. So I just want to not blow you off, Fraser, and say you're spamming or whatever. The way you're thinking about it, a lot of people have those same concerns. And P's are higher than they've ever been. I'll give you that. Some world in there, I think if you're an investor, where I try to settle anyway, and nobody's calling me for an investment advice, I try to settle into stocks that have positive earnings and have positive growth rates, ideally plus double digits, right? So double digits being 10% a year, ideally closer to 25% a year. And so while you are paying up for the PE in those situations typically, there's a world that over time, and I'm not smart enough to give you the formula, there's a world that over time, as the company earns more money, despite inflation and the money that you invested in the past, your money will continue to grow faster. So I'm not going to pretend that I'm the accountant who can tell you that, but look it up, because a dollar invested today in anything is a dollar that would be less tomorrow. So there's a game to all this, and usually the easiest way to play it is to close your eyes, pick solid companies, invest for the long term. I would throw in there, be leery of debt, and always make sure your company is growing and not pedaling in place. Danny, you asked about Pinterest. I talked about it for a second, but just to reiterate, if Pinterest comes out and says everything's what you thought it was, their stock will likely go down. If Pinterest comes out and says we are growing faster than we originally reported back in January, or whenever the last time they took the mic, then all of a sudden you're probably rolling into that $75 price. I would wait for a dip on Pinterest. I think that it's a good stock. And as someone who owns Etsy, I've thought about 100 times buying Pinterest on the side because a ton of people advertise on Pinterest their Etsy wares, right? So if you make Christmas wreaths or something, it's very affordable to run ads on Pinterest. And so there's a play on owning Pinterest if you own Etsy. I would probably have to see that stock price go down into the low 60s before I combine those two worlds. I just don't like Pinterest's future as a platform. I think that it's been around for a while. It's got great engagement. It's growing internationally. I just don't know what the next trick is. And that's something that you always have an advantage with when you're talking about Facebook, Google, Amazon. You feel good, Apple, you feel good that those guys are going to come up with a new trick when this trick gets old. I don't know that I feel that way about Pinterest. That's just my opinion. So that's why I haven't been in a big rush to buy it. All right, Andrew, Rocket is one of my bigger holdings. Welcome to the club. They announced amazing earnings. When are they? Listen, you and I can cry about Rocket all the time, any day. I'm right there with you. Let's put it on the board. I'll do a quick 1-2 and get this dragged out so you guys can see it better. They're coming out next week, May 5th, right? And I always say the same thing with Rocket, but I'm just going to call it out. This is our problem, Andrew. It's next year. It's the sentiment for next year. So even this year. So no one who's an analyst, 12 analysts here, 13 analysts for 22. Last year, EPS was $4.11. Analysts think that drops this year to $2.50 and drops even further in 2022. Minus 24% sales in 21, minus 16% in 22. Again, these are projections from analysts. My projection, and I don't have the stats to back it up, so do your own research, is that the housing crash is way overblown, and that the mortgage business will not only be fine. I think refinance gets clipped a little bit because of interest rates, but core mortgages, I think, are going to be fine. And I think what people are underestimating out of Rocket, through my research, is the Rocket's ability to penetrate new home sales instead of relying just on refinance. So that's my take. Analysts across the board disagree with me. I'm happy to hold the stock. I think that the company does want to win, and I do think they have a technological advantage with some of their systems. They're playing, they're swinging for the fences, and it's not an expensive stock, and so I'm sticking with it. I think that we'll get more good news as the year comes by. Last time they had an earnings, so if we got earnings on May 5th, the last time they had an earnings call, they announced the special dividend of roughly $1, something like that. So hey, they know what investors want, and they're playing to investors. So if you can stomach it, stick with it. If you're nervous, every analyst on Wall Street thinks that they're going down. So pick a side. I'm sticking with it. I'm not even in it for a year yet. I forget when the IPO was, Andrew, but it was roughly July, August or something. I wouldn't sell a share until I made it to at least 1 year. Not to mention, spring and summer are the best-selling seasons for houses. So all the more reason to at least wait for one of those quarters to get reported. The quarter next week is going to be Jan through March. Yeah, so bad time. Bad time for selling houses. We'll see how they perform. I would encourage you to at least strongly consider hanging on to it through, let's see, 3 months from May 5th would be August 5th. That's about the next time they'll report. That's going to be a good earnings call, just because that's right where housing sells. So my 2 cents anyway. Henry, do you believe, Henry Louis, sorry. Do you believe Elon Musk predicting the Model Y will be best selling car in 2023? The one key advantage that he does have is their international presence. I personally wouldn't make that bet. I wouldn't, like, if you offered me $1, just a fun bet for 2023, I would want to be on the no side, is what I'm saying. So if Elon said that and he wanted to bet $1, I'd bet $1 with him, because I just think that world is going to be a lot different. And of course, if we're talking about best-selling vehicles, we have to get into China in order to tabulate. I assume he was talking about global best-selling vehicles. And then you have the Chinese equivalent of GM, which starts with an L, I think, but they sell a shit ton. And Volkswagen's right there with them. You guys would die if you looked at Volkswagen's sales numbers. I see a lot of Volkswagens in America, but like when I looked at global sales numbers, I was like, holy cow, those things are popular. And they are in China as well. So I'm out on it. Desktop metal. This is one that I have not covered here, but I have definitely read about it. Not enough to remember if I liked it or not, though. DM, $14.21. Is this IPO? No, not an IPO. Came out in June of 2019. Spiked to 22. Spiked to 33 in February. Now you're down to 14. And let's squish some of this stuff in. Getting a little bit better on my screen shares, guys. Missed their first earnings this year. I don't know. Maybe it's a SPAC. Some of these eyeball charts aren't great. Revenue up and down, earnings, they're getting slightly more profitable in terms of losing less money. They sell additive manufacturing solutions for engineers, designers, manufacturers, blah, blah, blah. Production system, manufacturing solution. I don't know. Desktop 3D printer. An office metal 3D printing system. Okay, so 3D printers. I think that those are awfully early to call a winner. On the analyst front, they're heading in the right direction. I don't know. I don't know enough about these. Now, this is impressive. Check this out. 480% potential revenue growth this year from 16 million to 95, followed up by another potential 100% next year. So if we're going to play that game, then we're going to have to play price to sales. Currently at 100x, but that's trailing 12 months. I'm not smart enough to figure out what price to sales would be if. Let's go to Seeking Alpha will help us on this. So it's DM. Going to the earnings estimates. We're going to skip past earnings per share, right? Because this company has none. We'll go right to revenue estimates. Forward price to sales at the end of this year, 34. 17, if they hit that number, 998 and 23. So what I guess I would say with these numbers here, still a little overpriced. I would try to, let's go back to this chart. I would try to save more money on the stock price because right now you're pretty much staring at a 2-year hold to get to a reasonable, to get to a reasonable valuation. And we see this would have been, on 420, $11.25 would have been nice. Now we can see that that has bounced back since then. That's probably about where you're going to want to get, man. You're going to want to chop that price to sales roughly in half. So $10 or below. You may have to wait for the next dip if it ever comes. But I don't know enough about 3D printers. Very impressive revenue growth rate. Definitely one to watch. Get cheap on it though, because it looks like it's going to be a few years before you're actually qualified to be $15, $16 stock. And why was it $33 in February? Because the market is very dumb right now. Just to skip to the chase. Alibaba, extremely cheap. Yes, I agree with that. And also, I feel like China thing has sort of gone away. And they're going to start picking on other people. Don't invest in Chinese stocks, though, as I've said a number of times. At least not ones for standalone, right? So over in my ETF retirement portfolio, the QQQ, which I'm huge on, the QQQ has a handful of Chinese stocks in it. Does ARK? I got some ARK over there. That might have some Chinese stocks. I know that IYC, which is consumer spending, I've talked about a lot. They have a handful of Chinese stocks related to consumer entertainment. Booking Holdings would be the number one in that bunch. So nothing wrong with Alibaba. If you go on fundamentals, that company, for what they're supposed to do in the future, that company is one of the cheapest that you'll find on the stock market right now. All right, skip to the bottom here, see what I missed. Okay, sorry. When you're reading these chats and they all of a sudden like refresh and stuff. Intuitive Surgical, haven't looked at it in a long time. That's a good stock in general, in my opinion, but I don't know where it is today. Year to date, so you've had a pretty good year to date run up. January 4th, it was 800. Dropped to 684. Now you're at 862. Current PE ratio of 88. EPS right about $10. If I squeeze this in, scoot this over, earnings hit, earnings hit, earnings hit, earnings hit. So they're definitely on positive territory. They were growing earnings in line with revenue growth until last year. Medicine, though, we have to throw that out because so many scheduled procedures and equipment capital and stuff was not spent last year. Where are we supposed to land this year? Bring this out a little bit. $10 to 13 to 15, 22% growth this year, 15% next year. I feel like that PE is pretty high for medical, but let's take a look at the track record. So this is an annual look at its valuation history. Forward PE today is in the neighborhood of 70. This is as of 4/23, so you'll notice that Yahoo gives you two different numbers. It's because this chart only updates last on the 23rd. You're at 70, it's climbing, so that's not necessarily a good sign. Historically, you're in the 30s, call it 40 for fun. We'll give it the benefit of the doubt in 40s. So I would say it's still trading high. However, if you know something that I don't, if you've read all the stories and all the rumors and if there are buyouts and all that stuff, then there could be something there. Only in the raw facts that I just looked at, or the raw data, because it's medical, I think that there's other buys that could potentially do better. Compare it with, it's growing a lot faster than J&J, Johnson & Johnson, right? But get a feel for where Johnson & Johnson's PE is going, as well as some other high biotech growth, and just make sure that that your 88 PE is acceptable, I guess is what I would say. Wish stock, so on Wish, I covered it last week. I like Wish in theory. I do not own it. Is it still $12? Oh, it jumped. I liked it at 12. Now you're at 15. This was good. 1207. Phenomenal growth rate. It's a mobile app with basically discount products. I did some deep digging because I was considering buying it in that $12 range. You can see plus 30% sales, plus 21% sales. And the reason that I didn't go any further, that I stopped in my research, was I didn't like the app reviews. So I always go into Google App Store. I have Android, so I'm always in Google App Store. But you can also check the Apple App Store. In my case, I have to do that on the internet because I don't have an Apple phone. But a lot of just bitchy customers. And so I get a little nervous at that. I don't need to see all 5 stars, right? But I don't want to see people talking about this place used to be good, now it sucks. I ordered something 3 weeks ago and the vendor never sent it, and I asked for my money back and customer service said no. I don't like that because it discourages user growth. Now, what do we know about reviews? It's always the people who are mad, right? That give the reviews, just like comments on YouTube. Luckily, you guys are usually pretty nice to me, but the people who disagree are usually the first people to comment, right? And I don't care. I mean, I sure as hell don't care about YouTube comments that are negative. I appreciate you guys when you send me questions and you say thanks and hi. That makes, that's what I sort of do this for. But that's where you have to touch, sort of like, I don't know, just weigh your options when you're reading app reviews. I think they're an important part of the research process with a company like Wish. But I also know that the loudest customers are more likely to do a review. But that's where I stopped on it. So if I was going to buy it, if I woke up tomorrow and saw it at $10 some, a new all-time low, if you will, I might consider it because I do think it's a momentum stock and it's probably somebody publishing an article on it and it goes, right back to the moon. I'll revisit it in that time and I'll check through app reviews again and read the earnings report, but I'm paused on it for right now. There's Tom Brady. I really hope Amazon stock. Yeah, I do too. Andy brought that up in one of the comments the other day. I don't know how much those rumors are like whatever, just the media, or if that's actually considered, but I'll take a split. I think that they're probably losing some ground from new investors at this price is the only thing. Like, I don't really care. I mean, I know that I'm not going to just accidentally buy an Amazon share at $3,300 or whatever it is. So I have to make a planned purchase to buy it, but I'm not intimidated by the price. But if you see what Apple did, the way they split, and Tesla's effectively done it too, it's smart because there's a lot of young investors in the market right now who just see it as an opportunity. And some of them think that they multiply their shares somehow. I don't know. I was like, some people think when a stock splits that they've made more money, and that's not the case. It's just the pizza's cut into pieces instead of giving it to you whole. However, I'm with you. I hope it happens. All right. I would add more Tesla under 500. That's Tom Brady and I are exactly alike. Thanks for the TGT. Oh, target below 190. Good job, Hen Hatch. Boeing's a basket case. Let's see what else we got. Andrew's talking about Rocket still. Trillion Energy, 30 cents a share. I don't, so that's not a kind of play that I would do, a stock at that price. But there's a game to it, man. It's just not my game. So I don't badmouth penny stocks like that. In fact, I just covered some maybe a week or two ago that I think have like long-term, outside chance potential. I just can't keep track with pennies. What I would say is buy them low. Buy as low as possible, and then you're hoping that somehow your penny stock is on a message board somewhere or a Reddit or gets tweeted out by a penny stock person, and then it goes up. That's not the game I play, but if I did, the most important things I'd be looking for is one that is not at an all-time high, ideally very close to at least a 52-week low, and then cross your fingers that somebody pumps it somewhere. I don't have the audience to pump a stock. Nobody's going to listen to me on that. But if you can get in and then you go up and make 3x your money, I'd get the heck out on some of that stuff. All right, guys, I have to roll, but I want to thank everybody. I hope you're having a great day. Big earnings reports after 4 today. Another big set of them for the next couple of days. So I'll probably try to hop on another live stream, maybe on Thursday. But I really appreciate you guys coming out and supporting the channel. It really means a lot. Please subscribe, like the video, all that crap. And we will see you on the next episode. Take it easy.